Alrighty, what's up, everyone? Hope everyone is doing well. This is going to be the weekly outlook for the week of March 3rd to 7th. So it's a brand new month. Let's go over exactly what I'm looking for. There is going to be plenty of volatility and liquidity as usual, just based off of last week. And let's get into the key economic events. So, really coming into this week, we have some red folder news that is going to be at 10 a.m. This is the ISM manufacturing PMI. This is going to be on Monday. As for Wednesday, we have some more red folder news. This is going to be at 8:15, and then plus the ISM once again, that is going to be at 10 a.m. And then Thursday, unemployment as per usual. And then Friday, we do have unemployment. Plus, we have Fed Chair Powell speaking. That's going to be at 12:30 p.m. I'll keep you guys updated in case anything changes on the pre-market preps. Let's go straight into exactly what I'm looking for. I also did mark out some brand new levels as well to just help you guys understand exactly what I'm looking for. So right now, you can see that the ES went from the top of the range to the bottom of the range. So far, we're bouncing at the bottom of the range, being that 8,500 level. As you can see, the markets are just ranging. What I like to see coming to next week is move back into the middle of the range, back really towards that 6,000. So for the ES, as you can see right here, I just had some new levels marked out. I kind of removed all my previous levels and drew out fresh new levels so you guys can see this a little bit better. So for on the daily time frame, as you can see, we really just came right back into this previous level of resistance turning into support. So you can see there's a touch here, which was really back at the bottom of the range earlier into the year. So this was a super key level for the ES, really just your previous all-time highs level. And you can see we had a super nice reaction off of that level coming into Friday. And you can see we were expecting a potential bounce here after going from the top of the range to the bottom of the range. And now you can see, right, we're having that nice bounce back inside the middle of the range. So really coming into this week, the key level that we are going to have marked out now is going to be this 5958 key area. So you can see this was a super key inflection point coming into last week, Friday. We ended up having this nice bounce from the higher time frame point of interest right back into our another key level, which is your 5958. Now we're actually above this key area. So coming into Monday, what we like to see is really price maintain above this area for this pushback towards the upside, right? We want to see if we can make this potential kind of inverse head and shoulders that could form if we use this as kind of the right hand side neckline. If we can hold this 5948 general area, we could potentially make that right shoulder for this continued push back towards the upside. So this is a key level coming into this week on the overall market. If we actually get back underneath this level, we're just going to confirm kind of this lower high kind of still being put in. So what I'd like to see, as I mentioned, is really that push back up and eventually make this like inverse head and shoulders, and we end up holding this general area. So that's going to be the key level coming into really next week. We're going to have more information here soon with the markets opening up at 6 p.m., at least the overnight session, and then we're going to talk about this a little bit more coming into market open on Monday. The next charts we can go over is the SPY. Similar thing to the SPY. As you can see, the SPY just bounced off the daily gap while the Qs is bouncing off the key level. SPY filled its main objective. Coming into next week, what I'd like to see is a reaction off that area that we broke down from being the 598. That is going to be the key level moving forward. So for the SPY, as you can see, marked out new levels as well. The key level that I have marked out here, it was really just this previous pivot high, which was your all-time highs that we had. Also, you can see this daily gap, right? You can see this is the bottom of the daily gap. We end up filling this nicely coming to last week. So super nice reaction off this general area. And then we also had other key levels marked out, which is the area that we broke down from. So 590, as you can see, super key as well. Touch here, multiple touches last week, broke underneath it. And now you can see we're back above it. So basically the exact same thing as the ES coming into next week. The key level that I have marked out is going to be this 592. This 592 is going to be super key, similar to the ES. As I mentioned, they're actually the exact same, right? ES and SPY, if you guys didn't know, are the exact same. They're both derived off of the S&P 500. What we like to see is potentially S&P really form this right shoulder for this continued push back towards the main objective coming to next week, which would be 600. So coming to next week, we really want to see the hold of your 591 for this continued push back towards the upside towards your 600. If we do break underneath your 590. We are just going to have this continue push back inside of yes last week's low, and that's going to be the general target if we break back underneath this 590. So this is going to be super key coming into next week. We're also going to have marked out the another key level, which is that 599. So now we can go on to the next chart, which is going to be on the NQ. NQ went from the top of the range to the bottom of the range. Right now, you can see that NQ is having a mini reaction off those lows. What I like to see coming into Monday is if we stay heavy underneath the 2948 level, that is going to be key if we're going to continue lower or bounce back inside the middle of the range. So after having that really strong push towards the downside coming into last week, really now we're just going to be looking at the reactions that we have off these lows. So you can see we close underneath a key level of support on Thursday, and now Friday you can see we're bouncing back up into this level of support, now turning into resistance. So if you can stay heavy underneath this support level, this resistance level, which is your 21,000, then we're going to continue lower towards the downside. If we break back above this key level, then we're going to see this move back up into this daily order block and potentially all the way back up in towards your 21,400. So if you go back onto the 1 hour time frame, as you can see right here, this is clearly your key level of support turned into resistance, which is your 21,900. It's going to be basically your 21,000. So your 21,000 is super key on the overall market. As you can see, this technically could be the potential lower high for just continuation towards the downside. But if we can break back above, similar to the ES now, if we can break back above your 21,000, hold above this key level, then we like to see this continue push all the way back up towards your 21,400. So that's going to be the key coming to next week, at least for Monday and Tuesday. We're going to see the reaction that we have off this general area. If we're going to have continuation and potential kind of reversal back towards the upside, or if we're going to maintain, stay heavy, and then continue back down towards your weekly objective, your weekly low from last week that was put in on Friday. If you go into the QQQ, the key levels I have on the Qs is just your 500 key psych, which was basically your previous retest level. If you go back on, basically, as you can see right here, this was just your old high all the way back from July. So just old highs back from July. As you can see, previous resistance turned into support, another touch here earlier in 2025, and then another touch once again, which also lines up with your 500, which is a key psych level. So I have that marked out. And then coming into this week, the key level for the NQ is going to be this level that I have drawn out, which is your 512. 512 is going to be this higher low key area. If price rejects off this area, we can expect more continuation lower, similar to the NQ. If you can get above your 512, base above your 512, you can see this continue push back up in towards this 520 general area, which is another area that we ended up breaking down from. So key area is going to be 512 for the Qs. Now let's go on to some of the tech names that I have coming into this week. Tesla. Let's go into the daily chart here. Really nice push towards the downside on Tesla last week. You can see that we broke underneath 330. Once we broke underneath, we had a sharp move towards the lows on this name, towards 300 and below. Now you can see that Tesla is trying to defend this mini daily gap. What I would like to see coming to next week is the reaction that we have off of your 300. So coming into Tesla last week, the major level that we had marked out was this 326. So this was that mini daily gap that we had, also your previous support levels. As you can see right here, we talked about this. If we break underneath your 326, we can have a really strong push towards the downside because there's really no volume here, right? This was your general area of volume. If we break underneath this, we can have a nice push lower to target really all the way back down towards your 300 and below was your 280, and basically this daily gap all the way back down towards your 270. So you can see right here, I have a key level support drawn out, which is basically just this old high, which also coincides with the area that we basically broke out from, and plus your daily gap level as well. You can see super nice reaction on Friday right off of your 273. What I really want to see based off the daily chart coming to this week is the buyer start stepping in off of your 277. This is the area that I'd like to see really start pushing Tesla kind of back towards the upside, which would be back towards your 300 and potentially your 326. If you go into the 1 hour time frame, the key levels I'm going to have marked out this week is going to be, obviously, number one is going to be the higher time frame daily gap, which you can see nice reaction off of on Friday. Number two is the area that we broke down from Thursday. Nice reaction on Wednesday plus your Tuesday's low. So if we can get above really your 296, we can see this nice push back up in towards 300 and potentially back towards this 310 as well. So coming to next week, what I'll be looking for is the break or really the reaction that we have off of your 296 for Tesla. If we do still stay heavy underneath your 296, right, we'll see this nice push back down towards your 280. But for Tesla, after having a really strong push towards the downside, I would like to see at least a mini pop coming into Monday and Tuesday if we're going to see some more short towards the downside. So that's what I like to see coming to this week on Tesla. If you go on to the NVIDIA chart, NVIDIA had earnings last week. We ended up moving towards the downside and taking out the earnings low. What I like to see coming to next week is the reaction that we have around the earnings low. If we can reclaim the 124 level, we can see this push back up towards that earnings high. So if you go on to NVIDIA, as you can see right here, higher time frames, the key levels that I have marked out is our 117. So you can see our 117, 118 is really a key level on the higher time frames. We also have marked out all the way back down towards your 113. So coming into Friday, we had a little bit of reaction here, and now we're just right back up in towards this earnings low. So you can see multiple touches right here. So this is a key level NVIDIA has to reclaim. So far, we're having a nice bounce off this general area. What it does look to me, if we can reclaim and hold this 125, we can see this nice push back towards the upside on the general market to potentially gravitate back in towards this 134. So if NVIDIA can hold above this earnings low coming into the week, right, we can see this potential kind of mean reversion back inside the range back towards this earnings high. So that'll be my main watch coming to this week. If the markets do want to bounce, I'll keep an eye out on NVIDIA. As for Apple, right now you can see that Apple was unable to get above the earnings high, which was your 248 on the higher time frames. Now that we're back inside of the range, you can see now the key level for Apple is going to be the 244 level. So for Apple, the key levels that we have marked out on this name was basically your earnings high. So we had this earnings high marked out and we were unable to get above this key level. Let me actually draw this right here, right? The earnings high, which was your 248. So coming into last week, we were unable to get above your earnings high. A little bit of reaction. The daily candle was unable to close above it. And now we had a little bit of a pullback here on Apple. The key levels for Apple was really back down towards your earnings lows, which was your 233. We had a little bit of reaction here just because of this wick. I don't really count that, but you can see there's just kind of this wick that was not supposed to be there. But for Apple coming into next week, the key level that I have marked out is really the area that we broke down from. So you can see multiple touches here, which is your 242. Multiple touches. This is the area we broke down from on Thursday. Friday, we're coming back up into this general area. So coming into next week, really, if you can get above your 242 base above this level, we'll see this nice continued push back up and towards your 244 and above. If we get underneath it, we'll see this potential kind of move back down towards your really your Thursday's lows and potentially your Friday's lows as well. So 242.50 is going to be super key coming into next week on Apple. As for some other charts, AMD straight down with the markets dropping. Very tough long. Will continue to show weakness over and over again. I will not be interested in this name until we can get back over 105 for Apple, as you can see right here. Sorry, this is AMD daily time frame. The key levels I have marked out really is all the way back down towards your 97. So you can see AMD has been very weak. We're actually underneath your 2022 highs all the way back from November. The key levels I have marked out now on AMD, which most likely it will gravitate down towards, is this really 96, 91 on AMD. So coming into really next week and further out for AMD, the key levels, as you can see, it's staying fairly heavy compared to the overall market. So you can see the market's bounced on Friday. AMD did absolutely nothing. The key levels that you're going to have marked out is just going to be your Friday's lows. What you like to see is for continuation lower, break underneath your Friday's lows, and we just move down towards your 96 and below on AMD. So not too much to talk about on this name. All pops are just going to get shorted on this one. The next chart that we have is Meta. Right now you can see that Meta is pulling back right in towards that earnings low. That is the key level on the higher time frames. Buyers are stepping in off this 646 level. What I like to see moving forward is a reaction that we have off of your 682. So for Meta, higher time frames, As you can see right here, the key level that I have marked out is really your 652, which is basically your earnings low. So this is the area that we broke out from. Your earnings low, we end up tapping this level as well. You can see coming to last week, multiple touches off your 650. So that's where Meta is starting to base off of. So coming into next week, the key levels that we're just going to draw your 650 towards the downside. And then the area that we kind of rejected off of earlier into the week on Thursday was the 682. So really price has to get above your 682 for some more continuation back towards the upside. As long as you stay underneath the 682, I just expect a little bit more consolidation in this range on Meta. So it has to break above your 682 or break underneath your 650 for any sort of continuation. Besides that, I expect a lot of range here on Meta coming into at least earlier into next week on this ticker. And then the last one I have is Amazon. Thesis for the week: Amazon staying heavy underneath 219, the key level. Now we ended up pushing towards the downside, filling a bunch of daily gaps and key objectives lower. What I like to see moving forward is a reaction off 219 for the overall ticker. So for Amazon, the key level that I have marked out in this case is just a couple daily gaps all the way back here, which is around your 208, 207. I just kind of drew this out. We also have more levels towards the downside if it does want to gravitate down towards 204. But for Amazon coming into next week, really the key levels that we're going to have marked out is going to be this 208, which we had a little bit of reaction off of, the middle of the range, which is your 212, and then the top of the range, which is your 218. So really, as you can see right here, fairly neutral week last week on Amazon. We really didn't move too much compared to the overall markets having a big drop. So for Amazon, really you just want to see the reaction off of your 212, at least coming into Monday. We reject off this 212. We will continue towards the downside. If you can get above your 212, we'll see this potential move back up and towards your 215 towards the top of the range, which is 218. So that's what I have coming into this week on the overall markets. As always, I'll go into more depth through the pre-market preps. The pre-market preps are back. My internet should be good from here on out. Plus, I'm getting fiber in about 2 weeks, so I'm super excited for that. So we'll keep you guys updated on things that are going to happen in the market. Make sure to join the pre-market preps. Those are at 8 a.m. Eastern Standard Time on YouTube every single day. And I will see you guys tomorrow morning. All right, take care, everyone.